I'm Dipesh Patel, editor at Trade Finance Global. Here we are at ITFA Abu Dhabi 2023, their annual conference. I'm joined by Mossa Chabalala at ABSA. Mossa, welcome.
Thank you, Dipesh.
Thank you for coming on Trade Finance Talk. So, quick intro, who are you, where are you from, and tell me a bit about what you do.
Yeah. So I'm from ABSA, the second largest bank on the African continent by assets. I'm within the corporate investment banking business, and under the corporate investment banking business we've got transactional banking, we've got markets, and we've got investment banking. So under transactional banking, then we've got trade and working capital business. So I'm part of the team. I look after what we call financial institutions trade sales, together with the responsibility of managing the risk distribution and the syndications business. And for my sins, I've also inherited the non-banking financial institutions trade finance business as well.
Well, good, because that's what I wanted to talk to you about a bit later. I guess breaking down your title, looking at risk distribution in trade finance, particularly in the context of secondary markets. Could you discuss ABSA's approach to this?
Yeah. So I think as the regulations continue to evolve, we've taken a view that we will approach distribution, or at least our business, from an originate to distribute strategy. So effectively, as a Pan-African financial institution, we originate a lot of transactions on the continent, facilitating that through what we call the FI Trade Hub. Therefore, it makes more sense for us as we increase our capacity, our balance sheet, to be able to then therefore distribute some of those assets that we originate.
Yeah, absolutely. So how's ABSA leveraging, and perhaps you could talk a bit more about the Trade Hub, how are you leveraging relationships and partnerships with your FIs for risk distribution and syndications?
Yeah, so there's a couple of channels that we actually take from a distribution perspective. So you look at the financial institutions where you execute MRPAs with, or master risk participation agreements with, where you then either buy or sell assets. We've got a lot of them that we work with as far as distributing trade assets. However, that's not the only channel. So we also have the insurance route, as many financial institutions would. We also actually, partner very well with some of the DFIs. We've been actually mentioned as the best trade partner by IFC as far as distribution of some of the trade assets that we do. We also exploring institutional investors as a way of distributing. I think it'll probably become more important for us to look into that, as also Basel IV is coming through as far as probably managing and optimizing your balance sheet better.
Yeah, and I think the theme of today's conference has been that the need to distribute more assets as a result of the upcoming Basel 3.1 rules. There's an increasing need to that. You mentioned earlier, for your sins, you look after the non-bank financial institutions. What are your thoughts on the growth of, I guess, trade finance as an asset class, and how do we open up this asset class to other capital markets?
Yeah, look, I think through the conference now, some of the panel discussions were around the trade gap, right, that continues to exist, and distribution plays a major role in creating further capacity for lending, or providing finance from a trade finance perspective. So it's extremely important that there is a market for distribution. As I said, you've got the various channels of distributing. There's a lot of education also that needs to happen. I think that's part of the conversation that also has come through as far as education. So for other players to come in, understand what trade finance is all about, how to look at it as far as booking it on the balance sheet, the benefit from a RWA savings perspective, and so forth. So the more you educate, the more guys will then want to play in the game, and that's what we're doing actually with institutional investors that we are currently talking to.
Yeah, are there also complexities around the introduction or the onset of Basel 3.1 rules? How are you navigating that?
Yeah, interesting. So for us, there's two things, and I think the one major concern that we had seems to have been dealt, which was the effective maturity of 2.5 years, right? And we know that from a trade finance perspective, you're looking at short tenor transactions, so 3 months, on average, and then all the way to 6 months. So if you then have a effective maturity of 2.5 years, it has a major impact on how you actually treat the asset, right? Also from a capital usage perspective. But then our regulator has, now approved that we actually consider transactions for the tenors that they are. But the other concern that is still there, is around the LGDs, right? So we've got an LGD floor of 45% that Basel is now sort of prescribing, which is now concerning, but I think there's a lot of conversation and lobbying that is happening, because the implementation should be next year, July 2024, July, right? So that at least gives us a little bit of time to engage around that and see how we manage that. And then the last concern, or maybe point that I wanted to touch on, is around the zero risk weight and the non-zero risk weight that is applied on some of the DFIs. Because of we distribute a lot of assets, and more and more banks are actually doing that through the DFI programs, then if you then have DFIs that used to then benefit them from a distribution perspective as far as RWAs are concerned, and then now they're not classified as zero risk weight, now they've got a floor of 45% LGD, that also has an impact in terms of capacity that can be distributed via the DFIs.
Thank you very much, and really good, important explanation there. I think that education piece will come in handy. I guess you look after trade sales, risk distribution, and syndications. What's your future view? Where is the industry headed? What are the main trends that we'll likely see, and potentially what are the challenges the industry might face as we head into 2024?
Yeah. So the adoption of I think Basel 4 or Basel is a 3.1 or 3.1, aka 4. So I think that remains to be a major issue in I think everybody's mind, and we're seeing again a lot of institutional investors considering the trade finance asset class, as a way of participating in. We're seeing, I think, more and more DFIs also now coming up with better programs that are more relevant to what most of the FIs are doing. And I think the conversation around SME and financial inclusion around this is critical, because when there's more requirement for us as financial institutions to provide lending to your SMEs, of course, to close the trade finance gap, it means that we then need to be able to then have that greater capacity to distribute and share the risk. The social responsibility element to it, and ensuring that we get nations that are currently poor into a different level of per capita Yeah.
Yep. No, thank you very much. And I think it really falls into some of the unmet demands and the unintended consequences of some of these regulations, perhaps on SMEs and SME access to trade finance. That was Mossa Chabalala at ABSA talking to Trade Finance Talks TV here at ITFA Abu Dhabi 2023. Mossa, thank you very much for joining us.
No, thank you for having me, Dipesh.